stock which will be reporting its numbers today will be Coal India. Nigel joins us to take us through the estimates. Nigel, what exactly is the key number to watch out for?
Well, quite a few numbers, in fact, Mangalam, and it's quite a big mix because you need to look at the FSA, that's Fuel Supply Agreement, as well as the e-auction sales, as well as the pricing, and that's what really can swing the numbers. Now, in terms of our poll, on the top line, we're expecting a growth of close to around 7%. Why does that come about? We already have the dispatch number with us. Now, that's given a growth of around 5.5% at around 151 million tons or thereabouts. Remember, e-auction sales volumes, that will see a big surge. It should come in at around 28 million tons. Some part of the street is also expecting a reading of around 30 million tons. So that will be a sharp surge from around the 20 million tons they did in the same quarter last year. In terms of FSA sales, that could be a tad bit weaker because demand on the whole has been quite weak. Focusing on realizations then, realization should come in higher by around 3 to around 4% on a year-on-year basis. Why is that? That's because international coal prices have moved up. If e-auction sales are going to move up, it's definitely going to be having an impact on the blended realizations as well. Because remember, e-auction sales, they are at a premium in comparison to FSA sales. Coal India has also taken price increases in the month of May 2016, as well as in the fourth quarter of FY17, so that as well helps the realizations. Remember, poor demand and oversupply of coal really puts a lid on any kind of big jump in terms of realizations. Keep an eye out on the FSA and e-auction mix, as I told you earlier. Remember, in fact, the e-auction premia in comparison to the FSA sales should move up to around 30%. That compares with around 21%. Traditionally, it used to be at more than 50% as well. And the FSA sales volume should be more or less flattish. Finally, focusing on the operational profit, the margin should be more or less stable. Remember, the realizations have come in higher, but watch out for employee cost. If that spikes, then in fact, that will totally nullify it. And profitability, we're expecting it to come lower, because the lower other income, they've been using their cash balance. That's been depleting. That explains why. Back to you.